Hello everyone, welcome to the markets breakdown analysis for Wednesday, 22nd February 2023. We will be breaking down the chart and show you the exact zones where price could close above for potential buys or close below for potential sells as well. So looking at the previous daily candle closing bearish, forming daily resistance at 18.43.700. The daily closed just below this daily support that was formed on Thursday, the 16th of February last week. Now, what we can see is the problem here is we have this previously price was consolidating on a 4-hour time frame within this range, right? And then we closed below, and now price is forming a new range, because when you drop down to the hourly time frame, we can see a new consolidation zone on the hourly time frame as well. So what we don't know is whether price is going to retrace and go back into this 4-hour zone again. The analysis today, they're going to be a little bit difficult in terms of buys because of this previous consolidation zone on the 4-hour time frame. So now we're going to break down the chart, and what we can see is we've got the most recent 4-hour resistance at 18.37 flat. We have our most recent 4-hour support at 18.25.400. Dropping down to the hourly time frame, and that's where the mess starts. We have the most recent 1-hour support at 18.37.700. We have a recent 1-hour resistance at 18.37 as well, but we have another resistance at 18.39. So I'm going to adjust this to 18.39. Drop it down to the 30-minute time frame, and again we have another resistance on a 30-minute time frame, and price is just consolidating, again going back into that range. And we have this 30-minute support dropping down to the 15-minute time frame. Again, this is just ideally is to wait for price to give you really good confirmation to take a trade. So I would say to look for sells below 18.31, below this 15-minute support, and that's almost the previous daily candle breaking the low. So this is going to be our no trade zone. And targets again are going to be really difficult, but I'm going to explain exactly why we're going to keep them small in this case as well. So going back to the daily, price formed daily resistance. The probability of price retesting this daily resistance, it remains high. Now we don't know whether, so when you break down to the 4-hour time frame, we have this 4-hour resistance. So we don't know whether price is just going to come back here, consolidate. We're not going to look for like a big target, let's say, as a first target, this 4-hour resistance. Our first target for buys would be 18.43.900, and that's targeting the daily resistance and the 4-hour resistance as well. And the whole idea about the no trade zone or looking for potential buys above 18.41 is because if price break and close above this previous 4-hour support that was formed where the price consolidated, there is a higher probability for price to retest the daily resistance and then continue bullish to retest these highs again. So our second target for buys, and we're going to keep it short again, is 18.47, and that's the 4-hour/1-hour resistance. Again, we don't know what the price is just going to reject, so whenever you are in some profit, just make sure to secure your positions and leave some runners. Now for sells, obviously, since we formed the daily resistance on the daily time frame, we have more data to play with, more price action to play with. So dropping down to the 4-hour time frame, what we can see is we've got the most recent 4-hour support at 18.25.900. Our most recent 1-hour support is adjusted to 18.26.500. Our first target could be this 1-hour support, and that's roughly around 50 pip range. Our second target for sells, we have this 1-hour support, and then we have again this 1-hour support, and then when you drop down to the 30-minute time frame and the 15-minute time frame, price is just a range in here. So since the daily has formed resistance, and since the weekly is bearish, we formed a minor small wick to the top. So since the weekly is bearish and the daily formed resistance and the daily closing below this previous daily support, there is a higher probability for price to do a wick fill on this previous weekly candle. So our second target for buys would be 1880, 1890, and that's targeting the weekly wick fill based on the previous weekly candle.